Cipla and Bharti Airtel, all down over 1%. Let's just take a quick look at the broader markets, which are clearly outperforming. And I want to put special focus on the Nifty Small Cap 250 Index, which is the top performer of the day. It's up almost 1% right now. And when you look at the counters that are, contributing to these gains, we have PCBL, which is up over almost 10% in trade right now, followed by companies like Fine Organics, CAMS, and Trident, all trading in the range of 7 to 9%. Some of the counters on the small cap 250 that aren't doing so well, we have Alembic Pharma down 5% is the top loser on the index right now, as well as counters like CSB Bank and Concord Biotech, which is, they're on the negative side by 2 to 4%. But on that note, we're now moving on to the next management and company that we have in focus, and that is Transport Corporation of India. And to talk about the quarter gone by and the future outlook, we're joined by the Managing Director of the company, Mr. Vineet Agarwal. Good morning, good afternoon, Mr. Agarwal.
Hi, good afternoon. How are you?
Yes. Well, I'll start off with, the Q1 results. What's your assessment on how the quarter went by? Growth was higher than what was guided before.
Yes, quarter one is usually the weakest quarter for the year because we are just coming off from the highs of the financial year end, and this year was also the election year, so it was relatively better than expected. I think some of the sectors like auto, like the capital goods sector continue to keep their momentum up, and I think now we should be looking at more positive growth for the next few months. So we are quite satisfied with the quarter gone by.
And what is the kind of outlook that you have in terms of growth for FY25 for the company as a whole?
For FY25-26, we are looking at a growth of, 24-25, we're looking at a growth of 15%, about 10 to 15% on the top line, and about 10 to 15% on the bottom line. And we expect this growth to continue for the next 2-3 years.
All right, so 10 to 15% of growth that we are looking at. Now, if I want to look at your three segments, understand what's the kind of outlook that we have for the freight, supply chain, and the Seaways segment. Where are we seeing more of these growth coming in for FY25? And for freight also, what is the impact that we're seeing coming in from MSME? So this is like a double-folded question that I'm posing over here.
Yes. Yes, well, you see the impact of the on MSME growth has been slightly muted in the last few months, and that has had an impact on the freight business, and that is why it has not grown as fast as the other businesses. We do expect this to start picking up because see, what has happened with MSME is that money from the larger companies has to flow down to the MSMEs for them to be more active, and that has been a little slow. I think credit offtake there has been less. So that has affected the freight business a little bit, but I do expect it to come back and reach about 10% top line growth for the year. For the supply chain business, 75-80% of our business is automotive logistics. We do work for two-wheeler, three-wheeler, four-wheelers, commercial vehicles, tractors, and earth-moving equipment companies. So the growth prospects are very good with infrastructure growth coming up. So equipment growth will happen. But nevertheless, automotive market is also going through a lot of changes. Two-wheeler growth has picked up. So we do expect this business to really do well and looking at about a closer to 15% top line growth. The Seaways business does coastal cargo movement. Basically on the west coast, we have 2 ships moving from Kandla to Cochin. And on the east coast, we have 4 ships that moved from Vizag, Chennai to Port Blair. And we are seeing decent cargo growth over there as well. Simultaneously, we are seeing good increase in container rates there. So that has helped in growing this business by about 14%. I do expect this business to be closer to the 5 to 10% on the top line basis for the year.
Thank you, Vineet. Before I go on and talk about the container and freight rates, I just want to ask what, in terms of revenue contribution, what's the breakup of the 3 segments, and is there a kind of targeted mix that the company is aiming at?
The freight business is about 45% of the overall business. The supply chain business is about 40%, and the remainder is the Seaways business. And going forward, the supply chain business is definitely going to grow much faster. So I do expect by FY26, the supply chain business to be the larger business out of the 3. Seaways will not grow as fast. It is mostly based on capacity expansion. And that capacity expansion will happen. We are now adding 2 new ships that will come in FY26. The order was just placed last week with a Chinese shipyard. But the delivery is still 2.5 years away. So that shift in any kind of revenue on the on the Seaways business or the increase in share of our overall business will not happen in the near future.
So Vineet, you mentioned about the container rates, but I also want to understand your outlook on freight rates. How are they as compared to the last quarter? If we see, are we seeing some signs of recovery over here? Along with this, another cost which have increased are the toll costs. So can you comment more, give a picture on all three of these costs?
Yes, the domestic freight rates on the road side typically is a factor of fuel and a factor of demand and supply. It is not necessary that when a truck moves from the north part of India to the east part of India, the freight rate on the reverse is the same because the demand on the east is much lesser. Hence, the components of the cost are now starting to change as well. Toll is becoming a higher cost. So is driver wages because driver availability is still quite weak in the country. And apart from that, maintenance costs, etc., have also gone up. So this structure is changing, though I do not expect a major shift in this year in terms of the freight rates. If there's any of these input costs increase dramatically more, we'll definitely see an increase. But not otherwise, we are seeing capacity addition happening on the commercial vehicles as well. So this should help to balance some of that increase in cost versus supply coming on board. So we should expect a little bit of an increase over the year for the freight rates, but not too much.
Yes. Vineet, I also want to talk about the latest agreement that you mentioned with Tata Sanfo Ship Engineering. The company currently has 6 domestic ships, and now you've ordered 2 more. Yes, the timeline of till you all get the ships in hand is by end of 2026. But in terms of the incremental benefits after that, could you maybe give us more details on that?
Well, we've always bought second-hand ships from the international market to run on the domestic coastal routes. It's just more economical. But with the Red Sea crisis, with the wars that are happening, we are seeing that the prices of these second-hand ships have just escalated too much, and they're just not viable right now. So we decided that we will go in for a little bit of a longer-term purchase with these brand new ships. These are 2 ships of 7,300 deadweight ton each. And the total cost is about $38.8 million. We will do part payment this year and then subsequent payments in the course of the next 2-3 years when the ship gets delivered in year 26. We will still keep a lookout for second-hand ships for capacity addition. If you're able to find something at the right price, at the right type of ship that we need for our services, we will go ahead and buy that. That's part of the Capex that we will is anyways budgeted, so it should not be an issue.
So the budgeted Capex for the ships that you've mentioned stand at about 80 crores. But what is the overall Capex that we are looking at for this year?
Overall Capex is about 375 crores. 80 crores, as you rightly said, is for the ship advance, for the advance purchase. Apart from that, about 125 crores is going to go into land building warehouses, about 100 crores into trucks, and the remainder into containers and other warehousing equipment and assets, etc. So we are quite confident that we should be able to do about 350 to 375 crores of Capex in this fiscal.
Yeah. I also want to get perspective on the competitive landscape. Now, in the FY25 con call, management of the company has stated that the company is facing competitive pressure in the LTL businesses. There are impact of competitors moving to a lower pricing models. What's the company's strategy to deal with this?
See, the business of LTL, which is in the freight business, essentially is a business which has a lot of competition, both from national players and from domestic players. This is a business where some of the express companies who do not make much money today and on the B2C side, which is on the last mile side, are now trying to move to the B2B side. And when that starts happening, they are trying to influence some amount of price cut and discovery on the LTL side as well. But this is an ongoing thing. I think this has always happened in the past as well, with regional players being present. So it is a competitiveness, a competitive thing that we are handling. We have started opening more new branches. This year itself, in the first quarter, we've opened 15 new branches. Our target is about 75 to 100 new branches this year. Adding more feet on the street, more sales team, having a strong digital presence across the board for the LTL business are some of the strategies that we adopted. And we are hoping that we should be able to achieve the target of 40% of the FTL, of the freight business by FY26.
All right, so that's a target for FY26. But another area that I want to focus is on, one, you've mentioned in supply chain business that the focus remains on the automotive side, but what other industries except for these are we focusing on going forward?
Well, we are doing a lot of warehousing for FMCG companies, FMCD companies, retail, e-commerce, quick commerce, name it. So we are working on all these segments as well. So the business remains robust, remains active, and we've been able to bring, create moats around our business because of a strong digital presence and all the assets that we've created in the multimodal side, the services that we have. So all of those things have definitely ensured that we are competitive even in the supply chain side.
Yes. And Vineet, one last question before we let you go. What are the segment-wise margin breakup for the three segments that the company operates in?
So the freight business operates about 4% EBITDA margins, the supply chain business at about 10% about EBITDA levels, and the Seaways business about 35-40% EBITDA levels. This is the broad structure, and all three of them contribute to the overall growth of the company.
Well, thank you, Vineet, so much for joining us, and we wish you all the best.
Thank you.
Yeah. Well,